This is Matthew Cratter from Trader University, and today I want to talk about Bitcoin market manipulation, in particular a practice that's called spoofing. Now, what is spoofing? It's a market manipulation technique, and it's where you try to make it look like a lot of people, or at least one large whale, want to buy or sell something. And you do this in order to manipulate the market. You do this by filling the order book, which is the list of all the buy orders and sell orders. You fill the order book, or at least one side of it, with your own orders. So for example, you could put in a lot of limit buy orders or one big limit buy order. And a limit order, of course, is just where you say, I want to buy at this price or better, which would mean at this price or less. Or if you're selling, if it's a sell limit order, it would mean I want to sell at this price or better, in other words, higher. So what you do is you either load up the bid or the ask with a lot of orders that are not real. You try to make it look like they're from other people, but they're actually just all from you. And so in this case, for example, you would put in a lot of limit buy orders, which would create the illusion of a lot of real buyers. And then you would use the bullish excitement that generates to quietly sell off your Bitcoin at a higher price. Again, please don't do this. It's probably illegal where you live. If you want to accumulate Bitcoin, you would do the opposite. You'd put in a lot of large sell orders, which would scare people. We'll talk about the so-called sell wall, which people are always looking at and posting on Twitter. And so you put in a lot of large sell orders. You make it look like there are all these people who want to sell their Bitcoin, and then people panic. And then what you do is you sit there on the bid and you buy up the Bitcoin as people panic. Is this illegal to do with stocks? Definitely. Definitely don't try it with stocks. Sometimes people try to do this with penny stocks, try to manipulate them. But the SEC has very complex monitoring at this point, as far as I can tell. Here's an example from last year of a California day trader who got in trouble with the SEC for a scheme that was relatively low in terms of how these schemes normally work. He or she made about $140,000, and the SEC still found him and got him in trouble. So please don't try this. Don't try this at home. Has it always been illegal to do spoofing with stocks? No. In fact, Goldman Sachs, as a market maker, and the NASDAQ used to do it a lot in the 1990s. And when I was first getting started trading in the mid-1990s, I witnessed this firsthand. I was one of the SOES or SOS bandits, which was a way you could basically get this small order execution system to give you fills, and then you could play around with that. But Goldman Sachs, what they would do is they would always appear, I believe it was under the ticker GSCO, or their market maker identity, their ID. They used to always appear on the ask. If you looked at level 2 quotes, in other words, on the sell side with huge sell order size, and then this would scare the market. And then Goldman, we could tell quite well because there weren't as many market participants back then. Goldman Sachs would then be sitting on the bid using one of these other order routing mechanisms, either Island or Arca, I seem to remember, and then they would scoop up the shares. So this used to be fairly widespread, this spoofing. As far as I can tell, it finally became completely illegal in 2010 as part of Dodd-Frank, and there's been a lot of enforcements against it since then. Is it illegal to do with Bitcoin today? Probably in the US. I wouldn't try it. There's no reason to try this, and you would need to have fairly large amounts of money if you wanted to try it. And if you have fairly large amounts of money, you're probably better off buying Bitcoin and hodling it. I see a lot of talk on Twitter about how this is hurting the market somehow, and I just don't see it. Maybe I'm missing something. You guys can let me know in the comments if I'm missing something. Here's a perfect example from John Satoshi Wick. We need to do more to tackle order book spoofing. Again, he's talking about that order book that contains the buy orders and the sell orders. This was on December 4th during the, I believe this is the weekend sell-off that we just witnessed. And John Satoshi Wick says we watched a buy wall vanish. So this would be the manipulation, trying to show that there are more buyers than there actually are, and a sell wall appear, none of which traded, but both of which spooked people into a massive sell-off. Now, the kind of people who get spooked by this are the leveraged traders, and it's not something really hodlers need to worry about. Should you worry about Bitcoin sell walls, for example? No, absolutely not. Bitcoin breaks through them all the time. There were large sell walls that were painting the order book back when Bitcoin was trading at 5,000 and 10,000 and 30,000 and 40,000. These are temporary things. Maybe those are real orders. Maybe they're spoofing. Only the people who are tracking this at a very high level will know, and even they may not know. The exchanges may know and may report you to the SEC or the CFTC if you try to do this. Some of these offshore exchanges get accused of not taking this quite as seriously. I personally don't think it matters. You can bluff on the buy side, you can bluff on the sell side, just like you can list your house for 100% over what it's worth, and it doesn't automatically make it worth that much. The way markets value something is where a buyer meets a seller and they cross, and that's how we know where something is valued by the free market. And so you can paint the tape, you can do spoofing, and I don't see, it is illegal. I support the SEC in that, but I don't see the big deal. If spoofing were legal, it would really only scare people who didn't know what they were doing. So Bitcoin sell walls, Bitcoin breaks through them all the time, as we said. Some of those sell orders get filled. When Bitcoin breaks through them, most of them just get canceled if they're spoofing. The idea is that you don't actually want to get filled if you're spoofing. You're just trying to manipulate the market. So that's the sell side of Bitcoin sell walls. Should you worry about Bitcoin buy walls, where there are all these Bitcoin buyers or fake buyers sitting at the bid, manipulating the price higher or trying to create the illusion of more bullishness than there actually is? I would say I wouldn't worry about Bitcoin buy walls either. You can go back and find these articles that say, for example, the move when Bitcoin back in March of 2020, when it moved above 9,000, this wasn't something to celebrate. It was fake because there was a buy wall. And again, when you look back at this, I'd give anything to be able to buy Bitcoin, not just for 9,000. I'd give anything to be able to buy it for 29,000 again. So these things, they're very short term. If you're doing very short term, highly leveraged trading, then this is something that you probably have to pay attention to. I'm not sure exactly how you would deal with it, though. It'd be a difficult thing to do. Important fact, a lot of people forget that large institutional traders and investors do not show their hand. They can't show their hand or it will move the market too much and they won't get a good fill on their new investment. It's not like Michael Saylor, CEO of MicroStrategy, that bought all this Bitcoin over the past couple of years. It's not like he puts in a buy order for 10,000 Bitcoin and just lets the order sit there. Instead, he pieces in the order very slowly, maybe using various OTC desks, maybe using various exchanges and trading algorithms. I know this. I used to sit on the trading desk at Peter Thiel's macro hedge fund. It was a hedge fund called Clarium back in the early 2000s. And we would buy $100 million worth of an individual stock, for example, or $2 billion worth of bond futures using special trading software that we got from Credit Suisse or Goldman Sachs or whoever our prime broker was at that point. And this software would allow you to buy 100 shares at a time or one contract at a time. So you'd really piece into these positions. On Wall Street, among institutional traders, large orders are always pieced together slowly. And if you start to move the market, you stop temporarily. It's a lot like poker. You never want to do anything that would leak your hand. And what Michael Saylor did when he bought his Bitcoin, he was fairly public about it. He did this Dutch auction beforehand to get people out. And so he didn't have quite as much, he didn't show his hand quite as much as people normally do. But even then, he didn't put in a huge buy wall to buy his Bitcoin. Can whales try to make Bitcoin dump by spoofing sell orders on the ask side of the order book, causing leveraged traders to hit their stops and get liquidated and forcing everyone to panic? It's certainly possible, but I would say, having sat on a trading desk, it's actually more difficult than it sounds. People think of whales as being all-powerful and omniscient, but this is never true of large investors. We see large hedge funds blow up all the time, and it's actually more difficult to trade with a really large account than it is to trade with a really small account. So let's say you try to manipulate the market here. You dump $1 billion of Bitcoin. You pummel the market and you paint the ask with all these spoofed sell orders, and it moves the market down. and let's say you also sell this $1 billion worth of Bitcoin to force the market down. Now, to try to buy that $1 billion back is not as easy as it sounds. You'll start to move the market back up in the process. So you can dump $1 billion, drive the market down, but as you try to put that position back on, you'll drive the market back up. I'm just using $1 billion. Maybe that's the wrong amounts now that Bitcoin has a market cap closer to $1 trillion, but whatever that number is, we'll just say a large order. Of course, if you do this, if you try to tank the market as a whale or as a big institutional investor or market manipulator, if you can trigger enough stops, you might be able to get a better fill as you buy back that $1 billion worth of Bitcoin. But then again, you might not. And so short-term trading by whales simply does not matter if you're a hodler. Even if you have a multi-day time horizon, much less a multi-decade time horizon, I don't think it matters. And again, it's rather than complaining about this, these people should have been celebrating, because it's great when Bitcoin dumps. You can buy more for the same fiat money amount. I would say otherwise, just ignore talk of whales, talk of trading, talk of leveraged traders getting knocked out. It really doesn't matter. And I would say it's the high time preference people on Twitter that spend all their time worrying about and blaming whales. And I've seen these people, even in my own comments, blame the whales for they themselves, the people who are writing the comments, not having enough Bitcoin. If you don't own Bitcoin, it's because you haven't bought any, and you've probably bought some junk instead of buying Bitcoin. Low time preference hodlers focus on doing everything they can to add more Bitcoin to their stash. They focus on researching Bitcoin, really understanding it, deciding for themselves whether it's a safe place to put the fruits of their labor. And they're not worried about whales. They focus on doing everything they can to add more Bitcoin to their stash. I'll give you an example. We used to have 3 cars. Last year I sold one of them and moved the money into Bitcoin. I also sold all my rental properties last year and moved the money into Bitcoin. Whatever you have sitting around, it may not be an extra rental property, but you can certainly, and I've been working on this as well, try to sell some of the junk that you have sitting around your house, especially if you can get some money for it and it's not true junk. Maybe clean out your garage, sell some things, have a garage sale, and move the money into Bitcoin. I think this is a more profitable use of time and constructive use of time than sitting on Twitter ranting about spoofing and whales and how the market's manipulated, etc. If you think Bitcoin's manipulated, you should think about the US bond market, which is highly, highly manipulated by the Fed. Bitcoin is the freest market out there. If you have long time horizons, even if there is some short-term market manipulation, it really shouldn't matter to you, again, unless you're a short-term trader. Spoofing, painting the tape, market manipulation has zero effect on Bitcoin's long-term value or potential valuation. Bitcoin's long-term future is going to be driven by increasing adoption, which once you become a Bitcoiner, you're always a Bitcoiner as far as I can tell. And the result of this kind of adoption, especially by Bitcoin maxis, is it ends up locking up the Bitcoin supply forever. I'm never going to sell the Bitcoin that I've bought. And so we really are going to have, we talk about energy shortages or supply chain problems or various shortages. The real supply shortage that is coming, that is going to be the worst supply shortage in human history, is going to be the Bitcoin supply shortage. When you combine this with the endless money printing by the central banks, this is what's going to lead to astronomical prices. And when Bitcoin's at $500,000 a Bitcoin or $10 million a Bitcoin, you're not going to be worried about that sell wall that was somehow keeping Bitcoin below 50,000. Scarcity is one way we can back into value. This is why a house in Malibu on the cliffs with a nice view now costs $65 million. There was like 1 or 2 families that used to own all of Malibu, and now just little pieces of it go for huge amounts of money. This is because, not just because Malibu's scarce, but because Malibu is extremely, I was going to say not just because Malibu's nice, but because Malibu's extremely scarce. There are only so many houses on the beach or on the cliff there. So you should think about Bitcoin in these terms as very, very scarce digital real estate. Bitcoin supply shortages will lead to astronomical prices, and the Bitcoin supply is completely inelastic. When there's more demand for it the protocol does not create more coins. It's not like when the demand for corn or wheat or crude oil goes up, you can just pump more crude oil, at least up to a point. You can plant more corn and wheat. You can plant it in your side yards and side fields, but there's no elasticity to Bitcoin. When the price goes up, when demand goes up, there's no way to make more of it, and this is determined by the software. As I said, Bitcoin maxis like myself are never going to sell. Now you may ask, how do you get to enjoy your Bitcoin there? How can you buy things with it if you never sell? Well, the reason never to sell is so you don't have to pay taxes on it. But instead, what you can do is you can borrow against your Bitcoin and then use that fiat to buy real estate, to buy consumption items, or to do whatever you want, maybe to put your kids or grandkids through college or help them set up a new business, etc. So there'll be good reasons probably to take out a Bitcoin loan and use it to either invest in other things or to spend on things that you and your family enjoy. If you want to learn how to do that, it's a fairly involved video. I'll link to this in the description notes below, using Bitcoin loans to buy anything. If you found this video helpful, be sure to hit that subscribe and like button. Hit the notification bell if you want to be notified when I publish my next video. And let me know your questions and comments in the comment section below. Thanks a lot for watching, and I'll see you in the next video.